Hello and welcome back to the Geordie Pig Investor channel. Today we are going to dive deeper into is VICI Properties stock a buy right now? What is VICI Properties? Stock ticker VICI. VICI Properties is a real estate investment trust. The company is based in New York and the firm is primarily engaged in the business of owning and acquiring gaming, hospitality and entertainment destinations, subject to long-term triple net leases. The firm segments include real property business and golf course business. The real property consists of approximately 4 golf courses. Its national, geographically diverse portfolio consists of approximately 28 properties across 62 million square feet and approximately 25,000 hotel rooms with approximately 250 restaurants, bars, nightclubs and sports books. The company owns approximately 34 acres of undeveloped or underdeveloped land on and adjacent to the Las Vegas Strip that is leased to Caesars. Some key stats about VICI Properties. They are based in America. They are part of the real estate industry, have a market cap of $29.6 billion. They went public in 2017, have 152 current employees. They have a 6-year dividend growth streak, a 5-year dividend growth rate at 6.64%, and a very attractive current yield sitting at 6.12%. If we see over the last month, VICI Properties price has really crashed down from being up over $31 to now being closer to $28.50, being down nearly 9% in the last month. And if you look back to the last couple of months, VICI was trading up closer to $32, been on an even significantly bigger drop since then as well. So in today's video, we're going to see, is this stock a buy, hold or sell? VICI Properties earnings call and fundamental analysis. VICI Properties announced a solid quarter with AFFO per share increasing of 4.9%. The company's total liquidity stands at approximately $2.9 billion. The company successfully deployed $230 million in capital this quarter and are optimistic about future opportunities in gaming and experimental sectors. Their robust capital allocation strategy enables them to maintain a high leverage ratio of 5.4, aligning with their target range, positioning VICI well for continued growth and value creation. This is very exciting for VICI Properties over the long term. Some fundamental analysis to do with VICI Properties. They do have a positive free cash flow at $1.3 billion. They have positive net income at $2.8 billion. Positive operating income at $3.7 billion. Positive gross profit at $3.8 billion. Exceptional 3-year revenue growth at 36%. Solid long-term solvency. Very low debt to equity at only 0.67. They have an average interest coverage currently at 4.61. And they do have a low Altman Z score at just 1.49 and positive net debt at $17.2 billion. But that's very much to be expected for a REIT. VICI Properties free cash flow analysis. Free cash flow is the money a company has left over after it pays for all of its expenses and any investments it needs to make to keep the company running smoothly. Free cash flow has a massive impact on what direction a company may be heading. And as you can see from the graph, VICI Properties has a negative free cash flow for the last couple of years until very recently when it has turned that into a positive. However, free cash flow is slightly different when it comes to REITs. A REIT is required to distribute out 90% taxable income every year, hence why they usually pay relatively good and reliable dividends. Having said that, VICI has reported some positive FCF over the last couple of years, which for a REIT means it's in a very, very strong position, especially when it comes to growing the business and continuing its solid dividend growth. Their current payout ratio is actually sitting at 74%. I'm really excited to announce that today's sponsorship is from none other than a really cool dividend tracking app called Snowball Analytics. I think you'll like it a lot and I want to tell you more about it. One of the most essential tools for any investor is a solid portfolio tracker, and Snowball Analytics is like the Rolls Royce of portfolio trackers. I have personally been using this app since the start of my investing journey and I'm extremely impressed by how much insight it provides into my portfolio. As you can see, the layout is very clean and intuitive and I find the platform very easy to navigate. Plus, it's packed with so many different charts and graphs that do all the hard work for you so you can really understand different aspects of the portfolio. It not only dives deeper into your own personal portfolio but also into individual stocks as well. Pretty much anything you want to know about a company's financials or dividend history can be found here within the Snowball Analytics app. In my opinion, what really sets Snowball Analytics apart from the rest is the features that it has designed specifically for dividend investors. This app tracks your portfolio so closely and has a very robust event calendar that shows you all relevant information you need to know about your stocks, as well as potential income coming in, and it predicts the income you are likely to receive in the future as well. Not only that, it adds total returns to your stock with the dividends you have also received, which no other dividend tracking app can do. This is so important as it can really show you the bigger picture and highlight how well your portfolio is actually performing. If you are interested, then please click my link in the description to check out Snowball Analytics. You can also get a free 2-week trial so you can try it out for yourself first and see if it's for you. Let's get back to the video. Next up, we are going to have a look at VICI Properties discounted cash flow valuation. This is also known as the DCF method. DCF is a method of estimating the current value of a company based on projected future cash flows, adjusted for the time value of money. The DCF valuation process calculates the present value of a company's forecasted cash flows based on a selected operating model. Right now, VICI Properties price is $28.70. And on the worst case scenario, when plugging in a discounted rate at 8.5% and a terminal growth rate of -3%, we can see VICI Properties is worth $24.31. When plugging in a discounted rate at 8% and a terminal growth rate at 0%, we can see that the VICI Properties will be worth $38.25. And when plugging in a discounted rate at 7.6% with a terminal growth rate at +3%, we can see VICI Properties would be worth $66.15. Not only do I look at the DCF valuation, but I also look at something called the relative valuation. The relative valuation is a method used to value a company by comparing it to other competitors based on certain metrics. The metrics it uses includes EV to revenue, EV to EBITDA, and PE ratios. When plugging in my numbers for VICI Properties, we can see on the worst case scenario, they believed VICI would be worth $43.04. On the average case, they believed it would be worth $46.44. And on the best case scenario, they believed VICI Properties would be worth $49.81. From this information, we can then come up with something called the intrinsic value. The intrinsic value is something that's been used for many years to calculate a stock, and it is very easy to calculate as well. You simply add together the relative valuation with the DCF valuation and then divide by 2, and you will come up with your average, worst and best case scenarios for the intrinsic value. On the worst case, it was valued at $32.75. On the average case being valued at $42.35, and on the best case being valued at $57.98. I also like to look at another method so that I'm confident in the valuations that come out with for that particular stock. The other method I like to use is the Wall Street estimates. They are an average estimate of a public company's quarterly earnings and revenues that lead to a valuation of that particular company. These numbers are forecasted by a company-specific analyst who provides research on that company and therefore comes with what they believe is an accurate valuation. On the worst case scenario, they believed that VICI Properties would be worth $32.32, which is a 12% upside on that current price. On the average case being worth $36.47, which is actually a 27% upside on that current price. And on the best case, they believed it would be worth $45.15, which is a massive 57% upside on that current price. Overall now, we know that VICI Properties is worth $28.70. So now that I have my 3 valuation methods, I can combine them to get my final worst, average and best case scenario for this stock. On the worst case, VICI Properties was being valued at $33.22. On the average case being valued at $40.39. And on the best case being worth $53.70. So if we apply a 10% margin of safety on the worst case price, you'd be looking to buy VICI Properties at $29.90. And with a 20% margin of safety, you'd be looking to buy the stock at $26.58. When looking at the average case price, if you applied a 10% margin of safety on this, you'd be looking to buy the stock at $36.36. And with a 20% margin of safety, you'd be looking to buy VICI Properties at $32.33. Finally, if we have a look at the best case scenario with a 10% margin of safety, you'd be looking to buy the stock at $48.33. And with a 20% margin of safety on this price, you'd be looking to buy the stock at $42.96. What does this mean for VICI Properties? Is the stock a buy right now? I think the company is at a very attractive price, and this is mainly due to the continued high interest rates and it being announced that they aren't going to cut as much next year as they initially predicted. This always puts strains on REITs, leading to them being under a lot more pressure and their stock prices plummeting. Having said that, they only seem to be going from strength to strength within the company itself, and with the consistent dividend growth coupled with a great dividend yield, I struggle to see many negatives with this particular stock. This is all backed up when looking at its different valuations, but specifically when comparing to other REITs in the relative valuation, it is showing incredible value. Looking at our overall results, even with a massive 20% margin of safety on the average case price, it is still comfortably undervalued. It was actually still undervalued with a 10% margin of safety on the worst case price as well, which just highlights even further how it is really trading at a very nice price at this current moment. I think it's one of the best current US REITs on the market, and at this current price, I will be continuing to add in my personal portfolio. Do you own VICI properties in your portfolio? Let me know in the comment section down below. And if there's any other stocks you want to see a breakdown on, drop that down in the comment section as well. I hope you enjoyed today's video. Please like and subscribe. Thanks for watching. This is the Geordie Pig Investor. Over and out.